Okay, so if you've got some money lying about and you're thinking about investing in real estate, this video is for you, especially if you have a fairly decent amount of money. My name is Brendan Turner, host of the BiggerPockets podcast, a show with over 100 million downloads, author of the best-selling real estate investing book on Amazon, the book on rental property investing, and I'm actually an active real estate investor myself with nearly 1,000 rental units. In fact, I just closed like 10 minutes ago on a new property. So I know a thing or two about real estate because I've seen a thing or two about real estate. Now, when I say you've got some money, I mean, it's kind of subjective, right? I mean, maybe it's you got 30 grand lying around. Maybe it's 300 grand you got lying around. Maybe it's $3 million, whatever. You know, this advice that I'm going to give today really applies across the board, but obviously the more money you have, the more you'll be able to then buy. But the concepts are the same. So here's how this video is going to kind of lay out. First of all, I'm going to start by stressing a really important point that most people get wrong or get confused about when they get into real estate investing. Then after that, I'm going to lay out 3 different strategies that you could choose from to invest passively. And finally, stick around to the end because I want to give you a strong word of warning that could save you tens of thousands or even hundreds of thousands of dollars down the road. Are you ready? All right, then grab a pen and paper, take some notes if you can, and if you like what you hear today, don't forget to click that little thumbs up button below the video. All right, let's get to it. Let's talk about turning massive income into passive income. I made that up. You like that? All right, now, like I said, I want to stress this important point that most people miss when they get started with real estate, and that point is this. Your highest and best use should dictate how you invest. In other words, you shouldn't pick your strategy because some guy on TV or in a book or on YouTube or whatever said something is cool or it works. I mean, it all works. All of real estate investing, it works if you work it right, but it doesn't work necessarily for everyone. I mean, especially if you've got money right now, and especially if you make a lot of money right now, your highest and best use of time might not be spending your time actively working in real estate, trying to become the next great real estate investor. In fact, I'm a big fan of a strategy that I call earn, learn, and turn, where basically you earn money doing whatever it is you currently do that makes you a great income. And then you learn about real estate so that you can make good decisions, but then you turn that money over into a passive real estate investment. Then you do that again and again and again until you got so much passive income lying around that you don't need any more money from your income source. And then you can just retire in bliss. Now, when I say passive income, let's talk about that. Real estate isn't like stocks. You don't really just go on a website and press a couple buttons and boom, you're investing. But there is something that I call the scale of passivity. In other words, some types of real estate are way more passive than others, and some are going to require a lot of work, some very little work. And it really depends on you and what fits your highest and best use. I mean, if you're a successful athlete or doctor or lawyer or whatever, you're making a killing, like your path is probably going to be a little different than the 23-year-old working minimum wage at Blockbuster. Okay, that's a terrible example, but you get the idea, right? So why am I telling you this? Why do we start this way? Because I want you to think critically about the 3 strategies that I'm about to lay out. This is that learn part of the earn, learn, turn strategy. All right, so now let's get to the strategies. Number 1, DIY. So DIY rental property investing, it means you are out there trying to identify the top markets, the best neighborhoods. You got to find real estate deals. You got to talk with real estate agents. You're running the numbers to make sure the math works. You're finding and managing property managers. You're dealing maybe with rehabs. You're just doing it all. And there's nothing wrong with the DIY method. It's just the least passive method of the techniques I'm going to cover today. Now, it can be pretty unpassive at the beginning, of course, but the longer you own those DIY rentals, like it gets easier and easier over time. In fact, I own a lot of those. When I got started, I was totally DIY. Today, I don't do hardly anything with them. But there's a lot of upside to this. I mean, those properties tend to go up in value, and then the loan that you use to buy the property, if you used one, it drops every month, and the rent usually goes up as well. And because you own that property, you get all the benefits and all the risks of owning that deal. It's just you, right? Now, if you want to choose that route, here's 3 action steps you can take today. First of all, pick a market. Do some market research. Find out what areas are growing, what population's moving, where are people moving to, where are jobs going, where are other real estate investors making a killing at. You can do a lot of that digging online on a ton of sites. You can also use BiggerPockets. Just came out with a thing called BP Insights, which is just for our pro members. It's pretty cool. It digs into the data for you. And there's a lot of articles there based on that data. Now, then you got to find a real estate agent. So you're going to DIY it, find a great agent, somebody who can help you. Not all agents are made the same, so you got to find one who understands investing. And third, analyze a bunch of deals until you feel comfortable with the math. You're not going to feel good up front, like you're not good at basketball the first time you hold a basketball. You got to practice, right? Now, if you want some help with that math, we do have calculators on BiggerPockets. Just go to biggerpockets.com/calc to check them out. All right. So That was DIY method. That was number one. Now let's move to number two, a little bit more passive. It's called turnkey real estate investing. Not turkey, not gobble gobble, turnkey. So basically there are a number of turnkey companies out there in like various cash flow friendly markets that'll do all the work of finding the good deal. They'll renovate the property. They'll rent it out to some tenants. They'll manage the property. All you got to do is like turn the key. Get it? Like turn the key. Here's funny. Okay, side note. I don't understand that phrase. Like, you're not even turning the key. Like, you're the landlord. You're not even like the landlord. Like, you own the property, but you're not even there. So why are we turning the key? I don't understand the name. I never really thought about that too deep before, but whatever. Now, turnkey sounds awesome, doesn't it? I mean, you get all that upside, no downside, right? Well, a lot of people do choose the turnkey route, and I have nothing against that. But I'm going to lay out a couple concerns here. First of all, turnkey companies are notorious for doing bad math or not good math. Like, they oftentimes underestimate just how much it really costs to operate a rental property long term. Like, repairs, what are those? Vacancy? No, our tenants will stay forever. You'll never have problems. Like, they wear these like rose-colored glasses because they're incentivized to do so. They want you to buy the property. So rely on your own math. Second concern with turnkey is that, great returns aren't always that great. Like, while turnkey companies might be finding great deals, they aren't necessarily passing that discount onto you. I mean, that's their profit. They got to pay their bills, put food on the table. So at the end of the day, you might just be paying full retail price for a property. And you could probably get a way better deal and get a higher return going the DIY route. But of course, that comes with a lot less passivity. So your actual return on investment every year might not be much better than you're getting invested in the stock market or some other investment on a typical, turnkey. Now, of course, cash flow isn't all there is in real estate, right? We talked about that a minute ago. There's cash flow, which is great, the money coming in every month, but the property value is probably going up as well over time if you bought in a good area. That loan's getting paid down, there's tax benefits, whatever. So the bottom line is run your numbers, do it yourself, make sure the returns are something you can accept, and then do it. All right, number three, for passively investing in real estate. When you got a good chunk of money, you can always invest with somebody else. Now, there's a lot of ways to do this. I'm going to go a couple of them. Like, there's crowdfunding, which is where you online companies, kind of like stocks, you just put your money together and they buy some big things. Then there's REITs, real estate investment trusts, like publicly traded companies. I'm not a big guy in that. And then my personal favorite is investing in syndications or other people's funds. Now, full disclosure, I do own and operate my own fund. It's called Open Door Capital. We raise money from people to buy big deals. So take this all with a grain of salt and know that I'm a little biased here. But before I even had my own fund, I would invest in other people's funds because the returns look better than what I could get from crowdfunding or through REITs, but it was still fully passive. I didn't have to DIY it. Now, here's the thing with investing in other people's deals, though. These deals are super big and complicated. And honestly, you're not likely going to fully understand everything that these funds are doing. If you tried to learn every single thing they're doing, they're no longer passive anymore, right? You might as well just do your own. So it means that you're not even really investing in the deal. You're really investing in the team, right? It's largely based on trust. Do you trust the team you're investing with to guide your money and deliver a good return? If you invest with a terrible company or in a real estate asset class that's going to end up losing money or in a terrible area, well, that sucks, right? But hopefully you invest in a smart team who's investing in a smart asset class in good areas, and they can navigate the complex and changing economy that we have towards mutual wealth. So what I like about investing in these funds and syndications is that everyone wins together. It's mutual wealth. Like, I won't get my big payday in my company until investors get their big payday. So syndicators have a really good reason to perform. All right, so those are 3 ways that you can invest in real estate when you have some money to invest. Real estate is not always easy, but it's also not super complicated. What it requires is taking action over and over. So the warning I have is don't let this information sit up here and go, oh, that's a good idea. Do something today about it, because you don't want to look back 10 years from now going, oh, I wish I would have done it. So my warning is don't let the complexity or the imagined complexity of real estate stop you from moving forward. Instead, wake up every single day and ask yourself, what is my most important next step? MINS, toward achieving wealth and passive income through real estate. And it might be reading a book. It might be listening to a podcast or watching more YouTube videos. But if every single day you did a little bit of action, you're going to get there. If not, you're going to be wishing 10, 20, 30 years from now you would have gotten started decades earlier. So my warning is this: don't just make this another YouTube video. Make this a pivot point in your life that's going to change your destiny and your family's financial destiny forever. Now, if you like that video, don't be shy. Click that thumbs up button below the video and leave a comment below if you have any questions at all, or you just want to talk about my you know, some people say glowing, handsome, homeless, whatever, beard. Now get out there and earn, learn, and turn. For BiggerPockets.com, my name is Brandon Turner, signing off.
Big